The following is a presentation of TFNN. The Morning Markets Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and you got markets slightly in the positive, and we'll just call it slightly because it looked like quite a turnaround Tuesday last night, but markets giving it up just a bit. You look where we were, at about 9 p.m. Eastern Time last night. You made it above 5,300. So the S&Ps, while we're positive by 20 points right now, we have given up 80% of the gains we had last night. Is that right? 75%. We were up to 80 points in the positive. We're about 20 points in the positive right now. Yeah, trading at 52.39. Not a lot of points when you think about the destruction that we had yesterday. NASDAQ 100. We're trading at 18,084. You were as high as almost 18,400. So you're talking about 300 points we just gave up in the overnight session from where we were. Dow up 140 points right now in the Russell, up by 13. Bitcoin, quite a day yesterday across the board. Bitcoin down to 49,000 and change. We're back to 55,070. Crude off 41 pennies at 72.52. We hit a 71 handle yesterday in crude. Gold contract. We got some action in gold. Excuse me. Even in the last hour and a half, you have gold now negative $13 on the session, trading at 24.31, and seems to be dropping from there. We'll check around and see what we have going on in the gold contract. We check in on yields, and yeah, quite a reversal from where we were even yesterday morning, right? Excuse me. You hit a high of 115 yesterday, right as I was almost coming on the air. We have the 10-year now at 3.83. I think we were in that 3.6 range when we were up there at 115 and change. Nonetheless, we're trading at 113.24. You're negative by 10 ticks, so we have slightly higher yield today, just reclaiming some of the action that we saw for yesterday. 30-year negative 23 ticks. Yeah, look at these moves, though. And just for some, context here, you're talking about higher highs, higher lows. Yes, today is a reprieve, but I don't think it's done just yet, folks. We will see what happens, man. Because yesterday was quite a wake-up, I think, for a lot of people. Same deal here, right? Yeah, we have a little bit of lower price. But, boy, you look at the run that we've been in since basically April 25th. Higher highs, higher lows, exacerbated by that recent swing we had with Monday hitting 115, and we're backing off a bit. But, yes, we will see where we go from there. You jump over to the dollar index this morning. And pretty similar to what's happening in yields, right? I just pulled up yields. The date was from about April 25th or so was when the slide began. You can see the dollar was up there at 106.50 for the better part of April. We made it all the way back up to 106.12. On June 26th, we were back up there as well on June 28th. And then it's been quite a 5 or 6 weeks for that dollar. The dollar spiking lower to 102.12 yesterday. We're up almost $1 off of those lows. But is it a turnaround Tuesday? We're going to find out. Yes, we will. We jump over to the VIX. You talk about a spike yesterday, man. To 65, back to 32. Still an elevated level, but not quite back at the 65 level that we were sitting at. Pretty remarkable. All right, we jump to some of the headlines. $6.4 trillion stock wipeout. How about that one? Has traders fearing the great unwind is just starting. And you know what? Before we do that, actually, though, I want to jump to the dollar yen and Asia, because that's quite a reverberation as well. The Nikkei up 10% after being down 12%. How about that one? Is that the Nikkei right there? I think it is. I think those are Nikkei futures right there. Yeah, we're trading 33,380 right now. Pretty sure that is. You put this thing on a daily. Yeah. Pretty remarkable. You can be up almost 10%, and that's the deal, because you just traded from 30,700 to 33,000 and change. You were as high as almost 35,000, but boy, quite a wipeout. And yeah, they got a new regime. I was joking with my dad yesterday. I was saying, man, can you imagine that? You go from all-time highs to getting wiped out and nothing, and retail traders over there getting wiped out dramatically. But they have a new regime coming, as you have hikes coming down the line. And I said, well, think about what our stock market would be at if we just kept interest rates at zero for 20 years, right, et cetera. It's been quite a run. That's a weekly on the dollar yen. Whoops. Look at that weakening, man, from 2012 at 75 all the way to 160. So it used to be 75 yen for a dollar, and it went all the way to 160 yen to a dollar. You talk about destruction over a period of 12 years. So they're worried that that's going to come back to some form of normalization. And yeah, you're at the highest levels you've seen since basically 85, 86, almost in my lifetime, in terms of the weakness of the yen versus the dollar. And so they're worried over there that is going to be a new environment that maybe those businesses are not used to, and that was a little bit of a shock, and you had unwinding going on, and that'll be the second article. And here it is. This one is the one you really want to pay attention to. JP Morgan says the carry trade unraveling, it's only halfway complete. We aren't done by any stretch. That's their FX strategy co-head. There's a lot of FX going on right now, so even if you don't understand it, keep those spikes up on your back when you hear stuff like this coming from FX desks saying the moves come amid fears of a U.S. recession and Japan rate hikes. We're not done by any stretch. That's the co-head of global FX strategy out there from JP Morgan. All right, now listen, they're always talking their own book. Keep that in the back of your mind. Whatever they're trading, they're talking. The carry trade unwind is at least within the speculative investing community is somewhere between 50 to 60% complete. Okay? Yen carry trades. Borrowing at low rates in Japan to fund purchases of high-yielding assets elsewhere have been popular for a while, and think how much you have to unwind, right? When this has been going on for decades, literally decades. But think how quickly things can go south when you get the type of moves you get. If you're borrowing yen and you have the yen go from 160 to 140, think about how much money you have to make with that yen that you borrowed to make up for the fact that you have the yen strengthening dramatically versus other currencies, right? If you took that yen, you put it into dollars, and then you put those dollars to use, you have to make 15, 20% just for the slide that you had in the last couple of days. That's why things can get bonkers here, okay? For lack of a better term, bonkers. Yeah. A recovery in carry trades to levels prior to the yen's rally is unlikely anytime soon, as the technical damage inflicted on portfolios from the short sharp move is not easily undone. Okay, these are things you want to pay attention to, man. Because as traders, you understand, right? Just imagine if you were, to illustrate how much pain this trade is in right now. All right. You were at 162 almost less than a month ago, and you're at 141. You were borrowing, and what you were borrowing is down 10%, as in it's strengthened 10%. So you better have made some money in the last month, because you got 10% makeup from the get-go to unwind. Stay tuned, folks. We got a lot to talk about. We'll talk some Uber with earnings when we get back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, folks. We got the S&P sitting at 5238 right now, and we jump over to Uber. So Uber out with their numbers, strong numbers for Uber, and you look at, this is where when you see this type of action in stock markets, folks, even a day like yesterday, right? Uber finishes yesterday almost flat. They come into the earnings, they crush those. Uber is trading right where you were last Thursday. You want to pay attention to stocks that are performing well in a market like this, especially a stock like Uber that you could argue has been underperforming dramatically, right? Not exactly. They're in the realm of growth companies to a certain degree, and still, now you've had quite a slide from where you were July 17th, all right? But the last couple of days, yeah, I guess they already took their pain trading from 65. But nonetheless, you're going to open back today at 63. We jump over to Uber numbers. Earnings beat as rideshare demand rates remains strong. Better than expected growth in ride hailing. Autonomous rides grew sixfold from a year ago through their partners. That's the other one you want to pay attention to when you're talking about Tesla, okay? Tesla's not going to be the only game in town when they come with it. And so this fantastical valuation that Tesla has going on, man, I'm not sure where it comes from. I digress, right? Gross bookings grew 19%. Man, gross bookings, which include, that's ride hails, delivery orders, and driver and merchant earnings, okay, but not tips. So that's everything. That's before they pay out the drivers, the merchants, everything. $39.95 billion in the 3 months. Uber's taken in $40 billion every 90 days, folks. Remarkable. Market was looking for 39.7, growing at almost 20%. Quite a number, man. The gig economy, Yeah, it's doing well in an otherwise grim week, as they put it here. The strength of Uber's results driven by better than expected growth in ride-hailing business, particularly in Latin America and Asia Pacific. Gross bookings in the mobility or rideshare division jumped 23% to 20.6. Imagine that, right? I mean, they had to diversify. They got into food delivery. But even in just mobility and rideshare, they're growing by 23%. Now, they're growing internationally. Okay, that's a big one. Users took more trips and drivers spent more time on the app compared with a year ago. The platform had 7.4 million monthly drivers and couriers. Ride-hailing hours per driver, all-time high. So they got more drivers. The drivers are doing more hours per driver out there. And yeah, it's a big number for Uber, man. Adjusted earnings, $1.57 billion, ahead of what the market was looking for, 1.5. Now, you know, what is always interesting here, right? So what do we potentially have coming down the line? We have a little economic stress. Are we going to come into a recession? I'm not sure. But Uber is not, a luxury. That's the difference. Now, their Uber Eats, you could make the case that that is a luxury, right? We've all seen the memes, people sitting there, they order food for 5 minutes, right? You're paying whatever you are. It's a luxury in most situations. Sometimes it's a necessity on many situations, especially if you have kids, if you're just working and you don't have the time to put together a meal. Sometimes it's a necessity that you just don't have the time, right? You forego the time, you pay a little bit extra for that time, which you just don't have. Other times you don't have the money. Therefore, you put in the time to go grab a few groceries, pick up the meal yourself, as opposed to getting it delivered, because if you have the time, you may not have the money. Ride-hailing is much closer to neither, where it's just a service, okay? Many people are not using ride-hailing as a luxury. They use it as a necessity, and that's it, period, and there's no trade-off. That's their ride, whether you're talking about airport, whether you're talking about visiting friends, whether you're just talking about lifetime activities. Nonetheless, Uber shares well off the highs at $82 that you were at earlier this year. You're trading at $58, but they're going to pop to $62, and they did hold up well yesterday on their earnings. You check out Uber this morning. I had this trend line just because I was interested in it, where you broke below it, right? You break. It is interesting. This is the trend line that you came off the lows of 2022. Uber hitting $19 back in the doldrums when the market was getting punished, when the Fed was on their hiking path. But yeah, maybe you have the lower boundary line hitting here. That was the boundary line that they were kind of in. Let's just, because if we actually even, where's the right circle on here? Right here? Yeah. Yeah, somewhere in there. That was the path it was on. Got a little euphoric up to $82. You're now testing what would be the lower. And listen, it's an art, not a science. That is definitely not a well-contained channel line. But it is an area that you bumped up against it. It was an area of support. You get above it, bounces again. You break through it. You're back to the lower boundary line. We'll see how Uber reacts. You're going to get a bounce today, though, as Uber trading higher on their numbers. We jump over to Caterpillar. Caterpillar with their numbers as well. You were higher, but you give it up just like that. Caterpillar actually in the negative now. You jump over to Caterpillar numbers on their earnings. 2024 profits will be higher than expected, but that's not doing it. That was probably the initial spike higher. Adjusted earnings of almost $6 a share, above what the market was looking for. Profit increased 20% from a year earlier. An increase in dealer inventories. Maybe that's what's paying them the price this morning, trading lower. The company reported an increase in dealer inventories in the second quarter, while its order backlog, which is seen as an indication of demand, increased from this first quarter. So if they got a backlog, I don't know, that's demand, yeah. They got dealer inventories, though. Why do they have an increase in dealer inventories while they have a backlog? That doesn't quite make sense. Sales and revenues expected to be slightly higher, but something's going on in that earnings call, man. They just said something at about 9 o'clock in the morning that caused this equity to drop from 327 back to 314, where you were yesterday, coming into those numbers. All right, and it looks like Harris has her pick. That's all over every news organization that I pull up right now. And it's Minnesota Governor Tim Walz. Not really familiar. And I don't think many in the country are, but as it happens, as we saw with J.D. Vance, they become pretty familiar pretty quick. When you go to the top of a ticket, it's going to be a lightning run to the end. We got 3 months, man, almost to the day. And so he is a very well-liked Democratic governor in Minnesota. And yeah, they're trying to balance the ticket, man. And we'll see where it goes. It's going to be a wild election no matter what. He's 60 years old, a less-known national figure, but popular in his home state. 91% of Democratic voters who approve of his job performance, third highest of any state. It's tough to get 91% of any party these days, with where some of those parties, some not, Democrats and Republicans, right? There's a lot of divergence within both parties, far left, far right, etc. 91% within a party. And yeah, so she had a few choices out there. Yeah, Shapiro of Pennsylvania was up there, and then you had Mark Kelly of Arizona was up there as well. Those seem to be the three ones. So she goes with Waltz of Minnesota. Of course, Minnesota, a big state out there. Pennsylvania is going to be a big state too. So interesting she didn't go for Pennsylvania. But nonetheless, you'll see a lot of him coming up in the next 3 months as we got the election looming large. All right, folks, we're coming back for the opening bell. S&P is now up 27 points, 52.45. We'll see if we get a turnaround Tuesday. Stay tuned, folks. We're coming back. Don't go away.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento Friday, July 12th and Friday, July 26th, 9 a.m. to noon Eastern Time for 3 hours of live trading. For this month only, use promo code LarryJuly24 at checkout to save $50 on your first month's subscription. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&Ps. And we drop a little bit, even on that open. We were coming into higher price. You're positive by 15 points right now. And look at where we were, even at 7:30. You were trading up there at 52.76. You lose, 45 points? Just like that, we're trading at 52.31. NASDAQ 100 barely in the positive, only by about 0.3%. Dow and Russell go negative. Dow off 38 points. The Russell right now off by 6. We jump around to some of the big dogs. Apple, and this is what's interesting here, okay? Jumping around this morning. Some of these big stocks are all in the red. I don't know how this market's going to get carried higher if these stocks are all in the red, but we will see. Apple down 1.5% right now. You jump over to Microsoft. There's a positive. 400 up by 1.3%. Google shares this morning basically flat, positive by 0.2% right now, as it looks like Google, federal judge yesterday, right, saying monopolistic policies. Tough to disagree with that one. I think we all kind of know that in terms of search. They are the monopoly in search, and they use their advantage to stay the monopoly in search. Pretty much the pure book definition of a monopoly. But the one thing I will say is that they might have lost that with Microsoft, Bing, and AI, because I don't know about everyone out there, but I find myself in certain situations going to ChatGPT and being thoroughly impressed by the results that they give me for search queries that I used to always go to Google for. So it is interesting. Have they lost that now with Microsoft and Bing and AI and people using generative AI large language models to search? That would be a great case, I think, in certain degrees. But yes, you know, the amount of money they pay Apple, think about the amount of money they pay Apple alone to be the search default on that iPhone. But even then, we've seen that they've been in discussions, maybe with Bing or something like that, right? So there is competition. But nonetheless, not what they wanted to hear. They'll battle that one out in court, I'm sure. We jump over to Tesla. Tesla shares, they're positive by 0.7. All the markets go positive. Dow back in the green. Russell back in the green as well. We jump over to Amazon. They're flat. 161 right now this morning for Amazon shares. What else? Meta shares up by 1.6%. Look at Meta, right? Quite a pop yesterday from Meta, and you're positive yet again today. I say pop. They were trading at 440 and change. You're trading at 480 and change. Quite a 24 hours for Meta shares. And the poster boy NVIDIA. Quite a drawback yesterday when I was on the program. We were talking about $90, and today we're at 105. Not bad for NVIDIA shares, man. Market up 27, NASDAQ up by 140. We keep our eye on the dollar yen, and that's what is interesting. I mean, there was a lot of cases to be made yesterday, okay, that yes, things are changing. Yes, the Fed is going to begin hiking, but it is too early to be in the emergency 50% basis point cut camp. I'll see if I can find it at the break. There was a great opinion piece from an author at Bloomberg. Not sure, but I pulled it up last night. And, you know, they were making the case that, hey, things are not this emergency that has come about from nowhere, which is supposed to be inter-meeting special cuts or hikes or whatever it is, right? You have something like COVID, you have a savings and loan scandal that breaks, you have banks going insolvent in between meetings. That's an event that warrants that the Fed comes in, they step in, they give you the 50% surprise cut, whatever it is, right? But if you look at the underlyings of this economy, you have an unemployment rate at 4.3%. We are still growing. I think the Atlanta Fed GDP, they're looking for 2% growth, something like that. It's probably a little early to warrant an emergency cut. Doesn't mean the Fed might see something that we don't see. Doesn't mean there might be some insolvency issues with this rollover and the carry trade unwinding that we may not see. Always be aware that you may not know everything, right? There are some variables out there that you might not be able to quantify that may be in working order right now. When you see the types of moves we saw yesterday, when you see the Nikkei down 12%, when you see our markets down 5 to 7%, 5 to 7%, right? 3 to 5, baby, by the end of the day, there might be some things going on in the background that we might not be attunely aware of, that some may be on the Fed. So it can happen. But there is the real case, man, that, you know, the writing is not on the wall yet. Yes, there are lagging indicators that are pointing to the fact this economy is slowing down. Yes, that is the case, okay, without a doubt. But when you look at the totality of the data, we're not in this steep recession. Not yet. That's where the market gets ahead of itself. The market is forward-looking. The Fed is not always as forward-looking as the market is. They like to be, quote-unquote, data-dependent. And that's where things differ, and that's where you're seeing them differ right now. So we have the 10-year sitting at about 3.82% right now, the 10-year. And when you look at the yield curve, okay, pulling the yield curve over real quickly, because it is interesting to see whether you're talking about the 2-year where we were, the 10-year. We'll take a look at the entire curve right now. Come on. So we get the 2-year at 3.93 and the 10-year at 3.82. So briefly yesterday, the 2-year was under the 3.82, okay? And that hadn't happened in a while. And this morning we have a little bit of reverberation, right? You get the 2-year up 5 basis points. You get the 10-year up about 4 basis points. And I'm just checking out real quickly because I always pulled up. Remember when we had CDs and we would take a look at CDs? Now, these markets go a little bit haywire when you get the type of moves you got yesterday. But you have a 10-year yield of under 4 right now. And we're looking at ladders. All right, you're looking at for the CD rates right now, you're looking at a 2-year ladder is about 4.25%, and a 5-year ladder is 3.84. I'll tell you, folks, I was looking at these last week, okay? Just last week, check this out. Just last week, a 2-year was, and I'll pull it up at the break of the exacts because I had it, because I was looking at it because, listen, you want to be positioned. We've been talking about risk-free rate of return in the CD market. You're still pushing almost 4% on a 5-year ladder, okay? Some context here. If you've ran the NASDAQ 100, if you've ran this market up, I mean, you just look at pre-COVID, you're coming in. All right, you want to do this one? This is a good one. This is one I love doing because everybody can relate to it. There's certain markers in your brain where events take place, and you can remember those events, right? Do you remember the election of 2016? When Trump won the presidency, right? Markets freaked out overnight. Remember that move? That was 8 years ago. How fast does time fly? Do you remember that, right? Markets were tanking. Oh, my goodness, Trump is going to win. The whole world thought that Hillary had it in the bag. Markets react. They tank. By the time the market opens the next day, they're through the roof. The market's realizing Republicans are going to control everything. There's going to be deregulation. There's going to be corporate tax cuts. That all came just. Point being, the market was doing phenomenally well at that point, okay? Trump got a lot of grief that he did nothing because the market was on a trajectory that was already doing so well. All right. Now, no matter what side of the politics you fall on that, okay, remember the NASDAQ 100 during that election was trading at 5,000, 4,700. We're at 18,000. That's 3.5 times your money in the NASDAQ 100 when we came into the Trump presidency. And that market had already traded, okay, to point, I'm not cherry picking lows. I'm not going back to when it was trading at 1,000 in 2009. I'm saying this thing ran from 1,000 up to 5,000 in 2016. And since then, you've timed it by 3.5%. You can still get 4% right now on that 5-year ladder. We'll take a look at that. We'll talk some CDs, we'll talk some bonds, we'll talk more equities when we get back, folks. Stay tuned.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, He has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. And yeah, let's do this round headlines. A textbook turnaround Tuesday doesn't mean the meltdown is over. Well, geez, we'll see if we even get a turnaround Tuesday, man. The market's giving it up just like that. Be careful in this market, folks. It's kind of the reason why I'm talking about CDs. The point being, okay, and I'm generalizing, if you're not willing to take like 25% down short term, you shouldn't be in this market right now, because there is a very real threat that this is just the beginning of a complete change of trend that we are experiencing. The NASDAQ 100 just doubled in share price. The NASDAQ 100 just doubled in price over the last year and a half. That's not how markets work in perpetuity, okay? We're not even at the 382 retracement from the run that we began in 2023, okay? That's some context. Now, taking a look at the CD rates on where they are, just to give you a quick idea, okay? Now, what's interesting is, okay, these CD rates, the 2-year, the yield on the 2-year was at about 4.55 just about a week ago, and the 5-year was at about 4.15 to 4.2. So you've had both of those drop 25 to 30 basis points in the span of a week. The reason why I say that is if you have money in a money market fund out there, folks, okay, don't get lazy in the same way that we got lazy for so long when interest rates was 0%. You kept your money in the bank and you took a while to say, hey, there's yield out there that I can go get, right? And then everybody really did. There was so much yield that we saw the banks had a problem, right? Those reserves were leaving the bank to find better yield than sitting in a checking account, which was getting no money. Don't let the same thing happen right now. If you've moved that money to a money market account that is accessing the free, risk-free rate of return, if you want to leave that money there, that's great. I would advise you to potentially check out the CD market if you're planning on leaving that money there and you're not going to use it, because that money market account is going to go down when the Fed begins to cut. Okay, and here's the real risk. The risk is not that you say to yourself, well, the money market account right now, what's the money market account earning right now? It's probably above 5.25 to 5.5%. I'll see if I can pull it up at the break, okay? The Fed's overnight lending rate directly correlated to what you're getting in those money market accounts, okay? The Fed's at 5.25 to 5.5 right now. Well, that's probably coming down at least 25, if not 50 basis points in September, right? And the market is pricing in about 6 cuts right now this year alone. So that's 1.5% that you'll come down. That'll bring you down to about 3.5% if that's what happens. Well, you say to yourself, okay, even if it comes down that far, which it's not guaranteed it will, because we've seen these scares before. We started the beginning of the year off saying, hey, the Fed's going to cut 6 times, and then inflation picked back up. That could happen again. So be aware, there are risks to every strategy. But the real risk is the economy has weakened. The Fed needs to do more than they thought. They're going to cut dramatically more than they envisioned, and you're going to have to cut to spur the economy, which is going to bring those money market accounts. What if they have to go back near zero to really spur on economic growth? Those money market accounts will go back to zero. You can still lock in almost 4% over a 5-year basis, risk-free, right? And yeah, you see the yields on where they go, right? 6 months, this is where you really want to pay attention to where the Fed's going to go right now. A 12-month CD is only giving you 4.3%, folks. Okay, now these are non-callable CDs is how they do it. They have callable and they got non-callable. You want to make sure that the bank doesn't call it from you if rates move too quickly. Get non-callable CDs in there, okay? Because the last thing you want to happen is you lock in a 4% CD. It's callable, though, and the bank says, well, we don't have to have 4% CDs out there anymore. We're going to call those back in. We're going to reissue CDs at a lower interest rate. If you get non-callable CDs, they can't call them back. It speaks for itself. If the 12-month CD right now, this is the best non-callable CD rate, is how this does. This is a graphic from Fidelity, how they throw it in. I like it. It's nice and easy to understand. It's the best CD rate offered right now by an FDIC-insured bank. A 12-month is 4.3. What do you think the market is saying if the highest rate the bank is willing to give you for a 12-month CD is 4.3%, and meanwhile the current overnight lending rate is basically 5.3%? That just doesn't mean that it's going to get down to 4.3. It's going to get far below 4.3 in the next year is what that market's pricing in terms of where the Fed is going to be. But keep those in mind, folks, because if you're not willing to take the heat, get out of the kitchen, and boy, you better believe it, because we got some heat going on in this market. And listen, longer term, this market's going to be fine. There is no institutional problems with this market when you look at the balance sheets of the biggest equities out there that are carrying this market forward, okay? I like to, the saying, this is not a pets.com, right? That type of deal. And I remember being around my dad's brokerage at that time, man. Ask Jeeves. That was another one, right? Ask Jeeves was another one. As the internet was taking shape and these growth companies were popping up, pre-revenue growth companies, they were just exploding in market cap on the NASDAQ. Not the case. But we have to consider, I think it was Peter Lynch, I was listening to a speech by him. It's notable. He talks about, market pullbacks. And I think he said something like every 2 years there's a 10% pullback in the market. And every 6 years there's at least a 25% pullback in the market. Okay? Now, it's outlandish, because I was hearing this either last couple nights, and this is not a recent speech, just something I saw on the internet, regurgitation, okay? But I said to myself, first I said, well, we just got a pretty deep pullback in COVID. And then I said to myself, holy crap, that's 4.5 years ago. COVID is 4.5 years ago, man. How bonkers is that COVID is 4.5 years ago? That's COVID on this chart. Do you remember when that looked like a big move in growth stocks? When you're on the NASDAQ, trade from 9,700 down to 6,600. You can't even see it on this chart anymore. Now, yes, you had quite the pullback in 2022 as well, okay? You go from 16,000 down to 10,000. That's at least a 25% cut, but that's just a historical norm. And if you think about if the market pulls back 25% every 6 years, but the last part of this is, we have had extraordinary gains. The market does not gain what it gained in these periods of time over usual appearances, okay? It had a 10,000 point run when it started at 6,600, the COVID lows, up to 16,000, okay? And then it had another 10,000 point run that it just made from the beginning of 2023. So would it be that outlandish? I mean, look what happened after the last 10,000 point run. What did we do? You traded down over 6,000 points, folks, and that was only when you were at 16,000 in totality, okay? If you trade down 6,000 points right now, that would bring you down to, 15,000 about? But on a percentage basis, it would have to be far greater because you traded down 6,000 points when you started at 16,007. Okay, that was almost a 40% haircut in the market in growth stocks before you doubled. So be aware of the risks in this market short term. You're willing to take the heat. When I'm talking about retirement, I'm talking about all that stuff. Yes, that's not a problem, okay? But shorter term, depending on where you are, the retirement perspective, okay, what you're planning on using this cash for, the next couple of years, we're in for wild events, man. We're going to begin cutting, and let's hope we're cutting with some positive measure and not in necessity at a slowing economy. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
All right, folks, welcome back. We got markets popping. How about it? S&P's up by 42 points. We got volatility everywhere in this market. You got to love it, man. We just traded down to almost 52.20. We're back right now to 52.61. S&P's had almost rolled over negative on the open. Not so much the case. You got markets ripping higher. NASDAQ 100 up 120 points. That's about 0.7% the positive. You got the Dow up 282 right now, and the Russell right now up by 10. We check in on commodities. Crude catching a bit as well. Crude up by 8 pennies to 73.02. Gold contract still sitting kind of where you were, 24.35 right now. Gold down about $10. We check in on the dollar. Dollar 102.99 right now. We check in on yields. And you got the 10-year. Yeah, down 12 ticks. 113.22 right now on the 10-year, and that is correlating to a yield right now on that 10-year of 3.83%, the yield on the 10-year. We check around to some of the companies with their numbers. Uber, up by 5.6%, up $3.30 on their numbers. You had Caterpillar out with their numbers. Yeah, so they do catch a bid. You trade lower on the earnings call. You trade pop higher. You back positive by $10 on strong numbers for Caterpillar. Yum Brands, I was going to say not the case, but they are ripping higher on their earnings as well, and that's quite a move for a company like Yum. Not a lot of volatility on Yum Brands usually in terms of the pop you may get in either direction following earnings, but nonetheless, you got Yum. They're up by $5.75, up by 4.3% right now for Yum earnings. And we check in on some of the FANG, the Magnificent Seven. Amazon down by 0.7% with this market popping. Apple, off by 2.7%. Watch out for Apple, man. Buffett, not what you want to see. Buffett unloading tens of billions of dollars of that equity. He sees something, folks, in this market when he's unloading and loading up on cash to the tune of $275 billion. Microsoft up by 1.6%, and then Google down 1.1%. And this was not the article I was thinking about, but nonetheless, Google's antitrust loss is a hollow victory for regulators. That's an opinion article over there on Bloomberg, but it comes way too late. But it is interesting to think about. It comes late because they missed the period of time that they were a monopoly. And it is going to be interesting to see how they hold on to that monopoly in light of ChatGPT and the competitors coming down the line. Folks, thanks for tuning in. Stay tuned. You got Basil Chapman coming up next. Steve Rhodes, Larry Pesavento, Tom O'Brien this afternoon. Have a great day, folks. We'll see you.